a little spike in the volumes will push or pull the price higher or lower. So the price volatility is very high. So this is one of the reasons. Secondly, this stock was introduced in the F&O space on 29th of November.
Yes.
After which there were a lot of shorts being built up on this particular counter. And now that we saw that the price was going up today, a lot of these shorts are being covered now, which is why also we are seeing that the price is going higher. So it's the F&O market playing a role as well here. And lastly, in terms of what the brokerages are making out of this, well, there are varied views when it comes to the brokerages. While UBS and while Macquarie and Citi maintain their sell and underperform, Macquarie on the other hand, UBS on the other hand has given a target price of 5,500 for Avenue Supermarts. Wow. There is clearly a bull versus bear case here. UBS is saying that the strong performance in Q3 indicates that there is a strong operational execution, whereas Macquarie says that the 17% growth is an improvement, but it is had a historical growth level of around 18 to 20%. And the store addition is in line with the expectation, but this does not indicate any significant acceleration. And what they're saying is that the gross margins are expected to improve, but this will be due to product mix. However, they're saying EBITDA margin will likely remain flattish at 8%, and rising competition for quick commerce will impact growth momentum going forward. Citi is also saying that it believes that throughput continues to be impacted, and this is due to an adverse product mix, store additions, as well as store additions in smaller town. So it's clearly a bull versus bear case here, and of course we'll have to wait and watch out for the entire results to come in to analyze it perfectly in order to understand as to what happened in Q3 exactly.
And I was reading another report that talked about the Q4 having 18 store additions planned. So it's the same thesis. If it holds out, we're going to see top line growth or revenue growth on a standalone basis head into the fourth quarter as well. But it'll be very critical to watch the margin picture and see how that pans out. Let's get our experts on. We've got Kushal Gandhi, who's technical analyst at Stocksbox, and we've got Asta Jain, who's the senior research analyst at Haim Securities. Asta, a slight deviation from what we normally do at the start of the show. We haven't started taking questions yet. We will, and I'm guessing that a lot of people have questions about Avenue Supermarts right now. As things stand right now, despite the 14% increase, we're still about 24% off the life highs or 52-week highs. So what is the potential upgrade that you see in the price right now? If you buy right now, is that the call that you have on Avenue Supermarts?
Hi, good morning to all of you. See, talking about this counter, we don't have a buy rating as of now because we really want to see whatever quarterly results company has given. So I want to see them in their financial performance as well. So I think it is a better and a safer strategy to wait for the results to come in and then make entry to this counter, because we should not forget the fact that now it is getting a stiff competition from this quick e-commerce companies. So that is one of the point which always be there with the demand growth, and it will always be a concern for the company's growth. On the other hand, I think that this private label brand, and I mean, because they are having so many private label items in their stores as well. So that is always giving DMart an edge over the competitors, because in the private label, we know that almost 25% of their revenue comes from that segment. So that is the major segment which can always give a edge to the company. So I mean, if I mix all the factors, one positive, one negative, I am of the view that it's better to hold the stock right now rather than making entry into this counter. Although our initial price target are somewhere around 4,400 to 4,500, but for anyone to make a fresh entry into this counter, it is better to wait for the results, let the results come in, and then make an entry into this counter, because then it will be a safer strategy. This is what we believe.
Right, so wait for the results is the view coming in from Asta on Avenue Supermarts. Moving on to the first query of the day, Deepu from Bengaluru has around 600 odd shares of Jacob bought at the levels of 350, and he wants to know that with the recent news, should I book a loss or hold from a longer term perspective. Today also the stock has seen a beating of roughly 10%. Currently it's down around 8%, and the person is sitting on a loss of 72,000. Just to give context, Corp basically had 32% share in the Navi Mumbai land deal, which was kind of bought by Reliance at 1628, but the valuations were at 2,200. So the price at which it was bought was much lower than the valuation of the land, which is why the stock is seeing a beating. And Corp also informed the stock exchanges that the Dronagiri Infra will undertake 99.76 capital reduction to return capital to its owners. Astha, I will stick with you for this one. Do you think that holding Jai Corporation makes sense at this point of time?
See, I think the news which came was really negative. And in fact, what I am seeing right now is that their price to earning multiples are also at a very high level. So the kind of valuation the stock is getting, it is on the higher side. So my idea here is rather than holding this stock, it's better to partially exit from this counter, because what we believe that the news came in has really impacted the sentiment, and I think that will really impact the financial performance in the coming quarter as well. So we are not very much positive on this counter. So one can partially exit this counter, and partially they can remain invested just on the hope, because results are around the corner. So let's see the results and then make the remaining strategies. So this is what we are recommending right now: partially exit from this counter.
All right, we've got our first caller for the day. We've got A. Mohan calling us from Telangana. Morning, Mr. Mohan. How can we help you today?
Good morning, sir. Thank you. Thanks for giving a good response, sir.
It's our pleasure. Please go ahead.
Sir, I bought Reliance Industries shares for 1,400. For 1,400, I got 60 shares, sir.
Okay.
Now I want to sell this shares and I want to buy the Amar Raja batteries. Is it a good decision or not? Just please clarify.
Okay. Mr. Mohan, you'll have to help me with a couple of things. When you bought it, what was the time horizon that you had? How long did you want to hold it?
I want to hold it for 6 months to 1 year.
Understood. Okay, so since this is a short-term question, let me take it to Kushal Gandhi. Kushal, thanks for waiting by, and sorry to keep you waiting. Reliance Industries, first stock of the day, 1,400 is the buy price. 60 shares has been bought. Would you sell and buy Amara Raja batteries?
Speaking of Reliance, right?
Yes, that's right.
Yeah. So, I mean, for Reliance, I have a neutral view. The stock remains sideways right now. It's right in the demand zone. I'm not expecting a quick recovery, but since he's holding, he should hold it, but should not average it. I'm expecting Reliance to consolidate between the current market price and up till 1326 levels. So I think Reliance may remain range bound for a few weeks to months. So yeah, it's going to be sideways trend, but you can definitely hold it.
Right. We have our next query on Eicher Motors. Dipanjali from Mumbai, and before I take her query, she's written that I appreciate NDTV Profit to create very interactive platform to get top analyst reviews on our portfolio.
Very sweet of her.
Yeah, Dipanjali, thank you so much for those kind words. Her question is on Eicher Motors. She's looking for a long-term perspective, and she's holding around 100 shares bought at 2,200 levels, and she's sitting on a significant profits of around 3 lakh odd rupees. Asa, I'll come to you on this one. Should she keep holding Eicher Motors in her portfolio?
Yes, I believe one can remain invested in this counter for further upside from here. Now, the reason being, we all know that it is the leader in 250cc motorcycle segment. And in fact, it has a market share of more than 90%. So I think in that segment. So I think with the new product launches and the kind of marketing activity this company is undertaking, that will really help the company in posting better performance going ahead. Why I'm talking always about financial performance, because these are the real standards on which the price momentum mainly takes place in any counter. So I always look after that how the activities taken by the company will help in improving financial performance. And I think these activities will really help the company to go upside from here, especially in the stock price momentum wise. So remain invested in the counter with a price target of 5,700.
Remain invested with a price target of 5,700 on Eicher Motors from Astha. We have our next caller, Abhirami from Chennai is calling in. Abhirami, good morning. Thanks for calling in. How can we help you?
Good morning, ma'am. Yes, ma'am. Good morning. Ma'am, I hold the Redington stock for 100 shares, ma'am. I buy the LTP for 205.
Okay.
Can I hold or sell, ma'am? Kindly give me your suggestion for fundamental and technical analysis, ma'am.
Okay. When did you buy this and what was the idea behind buying Redington?
Ma'am, I buy for two past month I buy, ma'am, buy the stock for Redington. I will take it's for good support for this. I will take, ma'am.
Okay. Kushan, I'll come to you for this one. It's basically a distributor of technology, of IT products and IT services. But how does this basically look on charts?
Well, the stock looks a bit volatile on the charts and it's been trading with, lower high structures. But I'm positive from a shorter term point of view simply because it's getting a very nice support at 50 DMA. And, the stock has seen some quick recovery after finding support at 200 weekly moving average. So I have a positive view from a shorter term time frame. So I'm positive for an upside of 225 and maintain a stop loss near 192.
All right, so I hope that answers your question, Abhirami. That's the technical view on the stock that you mentioned, Redington. We've got a couple of questions on Bajaj Finance. I'm going to club them. And this is, in fact, the first one I'm trying to find the name. I do not have it. Okay, so there's Roshan who's asking, there's one more question on Bajaj Housing Finance. Roshan has bought 750 shares at an average price of 137.57 and planning to add further and to buy the current price, which is 126 or thereabouts, and to buy 250. We've got another who has bought, who's wondering whether this is the right time to buy for the long term, which he defines as 3 years. Asa, on the fundamentals, would you do so?
I think better to wait for more fall to come before making a fresh entry into this counter, because I think as the major concern is with the sector, because right now what we believe that in the NBFC sector, the AUM growth can be a concern. I'm saying can be a concern. So we really need to see how this AUM growth pan out for this company. So I think it's better, because when the issue came, it has already risen up to more than 80% from the issue price. So let the stock cool down more, and meanwhile we'll get the results also, in which we really need to see the AUM growth, which I am rightly I'm skeptical on that. So better to wait for more fall to come in and then make entry into this counter rather than just entering at this point of a time.
It's a good point that you're making. We've seen its loan book grow by over 20%. Let's see how it pans out in the third quarter as well. Maheshwari is calling us from Hyderabad. Morning, Maheshwari. How can we help you today?
Good morning, sir. Thank you for this opportunity.
It's our pleasure, Maheshwari.
Actually, I bought Dr. Reddy's near 1,392 somewhere. Now I'm getting profit around 30 rupees per share, and I have 200 shares with me. Can I increase my shares, or I have to exit now? Because it's I'm not understanding.
Yeah, okay. So, but when you bought it, Maheshwari, did you buy it based on the fundamentals, or did you buy it for less than 1 year?
I just bought 6 months back.
6 months back. Okay, so you bought it 6 months back, but did you buy it because you liked the company? Did you look at some of the products that it makes, the markets that it is part of?
No, because market has come down, right?
Yes.
From that election point to till now. So this company is good. I thought I have to invest in this, so I just bought it.
Okay, that's a fair point. Okay.
It has rapidly came down from 5,000 to 1,300 actually. So I thought this would be a great investment time to invest in this. So now I'm getting 30 rupees per share. I just want to increase more.
Understood. I understood that. But if you are told to hold this for the long term, and by long term we're talking about 2 years plus, 3 years plus, would you be willing to hold it, Maheshwari?
Okay, if I'm getting a good profit, I'll be willing to hold it there.
Okay, all right. So with that caveat, assuming that you get a good profit, Asta, what are the chances for Dr. Reddy's Laboratories? That's a precondition to holding it for the long term. So is that going to take place, and would you suggest adding more at the current point?
I think one can add more if a stock fall more. Now there's two major supports to this idea. First of all, I think the kind of launches this company is doing, and especially they have a plan to launch 20 new products in the US market. So we all know that whenever a pharmaceutical company make new launches, it always adds to their financial performance and always liked by the street. And street in that way just give the thumbs up to the stock prices also. So first point. Secondly, in fact, the management has also guided double-digit growth in the coming couple of years. So I think with the management optimism, with the new product launches, I think this stock is well poised to show more upside from here. Right now, it is quoting it as around 1360. My idea is it can go to the level of 1500 to 1550. So you can add more stock at the lower levels, not right now, maybe at around 1350 or 1340 price.
Right, add more at lower levels, and 1500 to 1550 is the target given by Asthan Dr. Reddy's. Moving on to our next caller, Ajit from Dubai is calling in. Ajit, thanks for calling in. How can we help you?
Yeah, thank you. Good morning, all. So I'm having Tata Power. I bought it around 250.
Okay.
And I'm having around 150 quantities.
Okay.
So want to know, can I add more at the present level?
Okay, and I believe that your horizon is from a longer term perspective.
Yes.
Okay, did you check the fundamentals of the company before buying Tata Power? What was the drive behind buying this particular stock?
I'm having this for the last 3 years. So in between I have added. So Tata Power, when it was around 100, 120,
okay,
I was having it.
Okay.
So whenever it was going up, I added little by little. So
okay,
right now I have around 150 quantity.
All right. Okay, got it. Asta, I'll come to you on this one. Is it the right levels to add more of Tata Power stocks?
I think one can wait for more downside to come and then make entry to this counter. Although I think long-term targets are good because we are believing that this stock has the potential to move to the level of 430, 435. Now, we are positive on this counter in the longer term, but if someone wants to wait, let's wait for more dips to come. Positive because one point is that their company is expanding its clean and green capacity from 6.7 gigawatt to almost 23 gigawatt I support by FY30. So I think that is the major positive. And in fact, management is also guiding a strong revenue growth coming ahead. So all in all, a good long-term story to bet on, but buying can be advised at some lower level. But price target can be set at around 430 to 435.
All right.
Okay, 435 is the target on Tata Power. Let's go to the next question. We got Vipul Sheth, who's messaged us from Ahmedabad, holding Power Grid Corporation of India at a cost of 640. Can it be held for more than 1 year? What should be done? Should it be bought at this juncture? And so, Kushal, on the charts, how does it look? Would you average your price at this point?
No, I'm pessimistic on Power Grid as of current market price. I mean, the stock has been trading with low high structure and it's dipped below the 200 DMA. So I think bearish implications might might sustain for a bit while longer. So I would recommend to avoid this stock.
And if you have existing holding and you're in a loss, which he's bought at elevated levels, would you sell at this point?
Yeah, I would sell at this point.
Sorry, say that again, please.
I would definitely sell at this point.
You would sell. Okay, you would sell. All right. So it's a sell on Power Grid Corporation as well. Manan Jain is calling us from Jaipur. Manan, thanks so much for calling us. How can we help you today?
Sir, first of all, Happy New Year.
Wish you the same.
So sir, I was following Tata Tech from the last March 2024, and it's been around a year. And I'm just getting confused, like there is no significant movement able to see in the stock prices. I just buy with the expectation of significant changes from IC to EV, and it is well positioned as compared to the KPIT Tech, right?
That was the thinking. You bought it. You bought it based on the fundamentals. It's lost value since you bought it. In fact, it's down 22% over the last 1 year. So what do you want to know? You want to know whether to keep holding and what are the prospects going forward?
Yeah, exactly. Like I'm just getting confused. Like I can't hold it more than 6 months because it's been like 1.5 years. So should I just hold, sell, or what should I do? Can you please give me some guidance on that?
So you're saying that you have a maximum time holding of 6 months. Is that right, Manan?
Yes, now.
Okay, so I'll get you a view on the technicals then and get you some perspective as to whether to shift to something else. Kushal, what's the view on the charts for Tata Technology? He's losing ground. He's bought at levels of 1,159. What's the advice?
Tata Tech looks like a falling knife, and I would recommend to immediately exit this position because there's been no significant recovery, and I think the stock is almost down 20-25% from his buying range. So I would definitely ask the investor to sell off his position at the current market price.
Let me quickly go across to Asta on the fundamentals. So Asta, is this something that you conform to as well? On the technicals, it does not seem to be very positive, but on the fundamentals, considering that he's bought on the basis of the fundamentals, would you say that he should have patience and extend his time horizon?
I think because if you talk about the fundamentals, being a Tata company, group company, I think we should give it some leeway on that part. So I think one can wait for some time because 6 months or 9 months, if anyone really don't want to book losses in this counter. So give us some time now, because we all know that this company has a prowess in ICE to EV conversion, smart manufacturing, AI implementation. And in fact, they have started adding more OEMs in their marquee client name. So I think all these steps taken by the company will yield results, maybe not in the near future, but in the longer time horizon. So here, if the time period is more than 6 months, then stay invested, keeping in mind that we can see further downside from here, because I really know that on the technical, when any stock make a new low, then there is a further downside from here. So that's why I think maybe more downside can be seen. So you have to really keep the patience if you don't want to lose any money in this counter. And here the time horizon can be 6 months.
Right, Asa, thanks so much for getting us those details. Kushal, Asa, do stay with us. We have to slip into a very quick break. Viewers will be back on the other side to take more of your questions, so do stay tuned.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again.
Welcome back. You're watching Ask Profit. This is a show that gets you answers to all of your stock-related questions. And the first question that we have on this side of the brick is on Indusind Bank. It's a bank that a lot of people have pointed out on the valuations. Looks attractive at the current price. In fact, in yesterday's Ask Profit, our fundamental analyst had pointed to this private sector bank and said that it holds value. The first question that we have on this side is from Venkatakrishnan Eicher, and he's holding already. He's bought at 1,100 levels, but he's only got a perspective for the next 7 months. On the technicals, therefore, in the short term, 7 months, what's the view on the upside, Kushal?
Well, I feel like there might be a short-term bounce considering the oversold conditions that we've seen in the stock. The stock's already down 40-45% from the record highs. So I'm just seeing some minor technical pullback, but I'm not pretty bullish on the stock. So from a shorter term point of view, if someone wants to have a very quick trade, I'm positive for a target of 1061 and have a very strict stop loss at 975.
All right, strict stop loss at 975 is the call on Indusind Bank. Moving on to our next query, Ekambarai is calling in from Hyderabad. Ekambarai, thanks for calling in. A very happy new year to you. How can we help you?
Yeah, wish you all happy new year.
Thank you so much.
I am holding a Tejas network. I purchased in September. 125 shares at a rate of 1,277.
Okay.
Now, actually, I am watching this since September. Its results were good, and then it was about 1,300 level. So when it dropped down to 1,200, I purchased. Now it is going further.
Okay.
Is it right time to average? Or please suggest.
Okay, and I believe that you bought this stock based on the fundamentals of the stock, correct?
Yes.
Right, so you
I watched the September results.
Okay.
I observed the September results were good and fundamentals also very good.
Okay, so you intend to hold this from a longer term perspective, right?
Yes, 1 year. 1 year.
All right, 1 year is the time horizon. Astha, I'll come to you on this one. His buying price is slightly higher than the current price of 1214. Do you think he should continue it for the next 1 year?
Yes, I think he can continue it for the next 1 year, although our price target at the initial level is around 1400. But I think this stock has a potential to move further upside from those levels. Now, talking about the fundamentals, yes, fundamentals are very attractive because we have seen the turnaround story in Q2 FY25 results, because in Q2 FY25, the results were into the profit. Profit after tax was a positive one, which was a negative one if I compare it on the year-on-year basis. So definitely, whenever a turnaround story come, market always gives thumbs up to those type of founder. Let's see if this type of performance, if company is able to manage for coming 1 or 2 quarters as well, then I think definitely this stock can move to the level of 1400 first of all, and maybe further upside from there. To yes, my idea here is to stay invested in the counter. A hold is a strategy which we are recommending to it.
Okay.
All right.
Oh, okay.
All right.
Okay, let me take the next one. Sanjay has got a question on Zomato, and he's bought at levels of 47. He's got 1,400. What an acquisition price this is, and that is reflective in the kind of gains that he's making in the stock. To 3.3 lakh crore is his profit, and he's looking to hold for the long term. Asta, what's the view? Should he hold on to what he has, add more, or book some profits?
I think partial profit booking can be done at this level, maybe not partial, so then 25% of the total quantity can be booked, because here the profits are very, very high for the investor. Now, talking about the fundamentals of this counter, we expect their going out gross order value will be more than double in the coming time. So definitely, if it will be the case, then definitely the financial performance will take a big upside from here, and then it will make this stock attractive also. So idea here is to book partial profit, or 25% of the quantity can be booked, but remain invested in the rest of quantity with a price target of around 310 to 320 at the initial levels.
Just need to point out, Mahima just pulled up the all-time low on Zomato, and that is 40 rupees. So acquiring it at 47 and having 1,000 shares or 1,400 shares bought at that level indicates quite a bit of gumption and confidence. So kudos to the investor for having picked it up and for having held for the amount that he did hold. He's bought very close to the all-time low, and it's either luck, good fortune, or absolute gumption and confidence. Let's talk about the next caller, and we've got Venugopal who's calling us from Hyderabad. Morning, Venugopal. I believe you want to know about Epack Durable?
Yes, yes. Good morning and Happy New Year to you.
Good morning, and wish you the same.
Actually, I'm holding Epack Durable at 590, 500 shares. What would be the 1 year outlook for this?
Got it. All right. It's at an upper circuit right now, 625. Your buy price is 590. When do you buy it?
Recently, because of I saw the strong demand in REC. So
you saw the strong demand in
REC sector. That's
okay. Okay, got it. But since your view is only for a year, let me go across to Kushal just to get you a view on the technicals. Upper circuit right now, Kushal, no sellers in the stock, but if you bought at levels of 590, do you continue to hold? What are the targets that you have on the upside?
Now, if we see the stock is almost extended, the stock is almost up 73% from November lows. So I think with the extended nature, the stock might succumb to some profit booking at the current market juncture. So I would advise him to book some profits and probably look for a re-entry when there's a pullback near 539, 550 odd levels. Right. The stock looks a bit expensive at the current market price.
All right, so that's the view coming in on Epack Durables. The next query is from Prasad, who's from Bengaluru. He has 2,000 shares of Yes Bank purchased over 5 to 7 years period at an average price of 26, and he's seeing a loss of around 13,000 odd rupees right now, and he wants to know whether he can keep holding it for another 3 years if the prospects are good. As I'll come to you on this one, should he sell, buy or hold?
For this counter, and here the time horizon is some years, then definitely it is a hold, because we believe that there were certain issues due to which the bank was not able to perform strongly on the financial front in the last few quarters. Asset quality was a concern, but I think going ahead now, bank is ready to move in the proper direction regarding those issues, and that's why I'm positive on this counter, recommending a hold on this counter.
Positive on the counter and recommending a hold on Yes Bank. We have our next caller, Bubana from Chennai is calling in. Bubana, thanks for calling in. How can we help you?
Hi, good morning. Happy New Year.
Happy New Year to you too.
Thank you. And I have my question on Nestle. I hold 30 shares at 2,500 apiece. And I looked at the fundamentals when I bought Nestle almost a year now. I'm looking for a long-term investment on Nestle.
Okay.
I want to know if I can hold it now or accumulate or wait for the quarterly results.
All right.
That's my main question.
Okay. I just wanted to ask you one thing, that why Nestle from the entire FMCG pack? I mean, what did you see in the fundamentals exactly that made you buy the stock?
I know FMCG is on pressure, but when I bought Nestle and it was almost around 1 year. That's why 1 year before. So that was the reason I like the stock too. So.
All right, understood. Well, you've done your research well, Bhuvana, but I'll come to Astha. Astha, do you think staying invested in Nestle makes sense because her, price is slightly elevated at 2,500 levels, and Nestle has not been doing very well in the past few quarters?
So there were certain reasons behind it. First of all, the low volume growth which we have seen in this counter were pulling the stock prices downwards, right? And in fact, now what we are seeing is that the management is quite optimistic because they have implemented certain strategies. In fact, they have done innovations also, and their rural penetration, because they themselves are focusing on increasing the rural penetration, and they have certain targets to cover certain villages also. So I think whatever strategies this management is focusing right now will deliver long-term results. In the short term, due to the inflation, the raw material prices, due to the lower volume, I think the market prices of this counter was not able to perform strongly, but I think it is a good long-term story to bet on. Maybe the time horizon can extend from 3 to 6 months, but I think remain invested is a better strategy on this counter. And the cost price is also not very higher. It is 2,500 and stock is currently 2,200. So I believe definitely one can see the profits on this counter in the longer term horizon.
Yeah, it's taken a bit of a battering after that entire conversation about sugar, right? Wasn't it?
Not sugar to be specific, but yeah, cocoa prices have gone up significantly. Even coffee is kind of hitting Nestle. Coffee prices are also hitting Nestle very badly. So, I mean, all of these things combined is putting pressure on the margins, as well as because, the inflationary pressure is there. These companies are taking price hikes, which is why their volumes are going down. So it's like a vicious circle which is never ending for all of these, major FMCG companies. Right,
so there you got some perspective, Bhuvana. Hopefully that helps you out as well. It's a good thing that we have the FMCG analyst sitting right next to us here in studio, so that you get all of your questions answered right here. We've got Puran Bisht from Nainital, Uttarakhand, asking a question on Suzlon Energy. Bought 3,424 shares at a price of 28.69. Wow, that's one word that I have for this kind of an acquisition. 62 is the current price. What would you do with it? Would you hold for the long term, or would you sell and book some profits? Astha, on the fundamentals, would you hold on?
Definitely hold on is a strategy from our side for this counter. So we are positive on this counter because, and first of all, want to give the target. It can range somewhere around 68 to 70 rupees at current point of time. Now talking about this counter, in fact, the WTG wind turbine generator, we are expecting them to grow at a CAGR of more than 50%. We really need to see how the execution will go on that part. But definitely, I believe the kind of order book this company is having, the company is well poised to show more upside from here. So stay invested in the counter with the initial price target, which can be kept at 68 to 70 rupees.
Right, so that's the view coming in on Suzlon Energy. Moving on to the next query, Sagar from Bengaluru has a query on PG Electroplast. He has 4,000 shares at an average price of 299, and he's been holding this for more than a year now, and he wants to know as to what he should do next. Kushal, I'll come to you for this one. This is one of those stocks which has seen a lot of momentum in the past 1 year. Do you think this momentum will sustain going forward?
Well, it looks unlikely. I mean, the stock's almost up 595, 600 odd percentage. And over the last recent few weeks, if I see, the stock is not showing some strength. So the candles are diminishing, the price trend is diminishing with decreasing volume. So I feel this can turn around to be a distribution. So I would rather recommend to be very protective with this capital and maintain a strict stop loss near 956.
I mean, we were talking about the profit in Suzlon, which was about 1 lakh, but man, PG Electroplast, 28.7 lakh profit. I think more than anything else, rather than the prospects of the company going forward, you're going to have to worry about capital gains tax at 12.5% long term. So yeah, congratulations, amazing buy price for Sagar there for PG Electroplast. We've got Shyamji Upadhyay who's calling us from Indore. Shyamji, namaskar. How can we help you today?
Hi, very good morning and happy new year to all. And I just wanted to know about the Hyundai Motors, which I'm been hold for 21 share at 1960.
All right. I just want to understand as to what was your thought process behind buying Hyundai Motors?
Work for Hyundai Motors in a dealership, and I thought that it will be when it will be goes around 2,500 something like that, and the fundamentals are very good over there.
All right. So you want a fundamental view on this. Asta, I'll come to you on this one. Hyundai Motors, what's the view?
The view is a little muted because what we are seeing is that in fact management is also not guiding a very strong on this part, and we have seen that their PV sales growth can remain muted for some more time to come. Especially what we are seeing is that management guidance is not very attractive. First of all, the PV sales number is not positive. So I think, in this industry, the most important point is the new launches. So in fact, we believe that the new launches are also not on the cards right now. So I mean, all these factors right now are signaling towards more downside from here. So maybe some more softness can be seen in the stock prices. But I think over the longer period of a time, because they have to pay royalties, so royalty, treasury income, all these will, not be coming to be on a very good part for the company in the coming quarter. So here, if the time horizon is more than 6 months, then definitely one can remain invested in the counter. I'm positive from a longer term point of view, but in the shorter term, we can see some more downside from here.
So Shyamji, Alex here, I'm just curious, since you said that you're working at a dealership, can you give us a sense of the kind of response? Of course, you are in Indore, which is one market. We're just trying to get a sense of the kind of footfalls. What are people looking at? Which products are people looking at?
Mostly selling by the Creta and the other segment also. Then the Hyundai Motors is doing quite well, as if we compare with the Tata and all. So Hyundai is a lot greater than Tata and all. So the profitability is coming up, but I don't know why the share price is so down.
Yeah, that's a fair point. Especially considering that it's making moves in the SUV space. Certainly something to watch, Shyamji. So the perspective, of course, that Asta has is that if you're at a time horizon of more than 6 months, which I think is the case for you, then she's positive on the stock. So thanks so much for calling us and for that perspective that you gave us on Hyundai's products as well. All right, we've got VRL Logistics that we're talking about next, and this is Kadir's question, and this is also a long-term fundamental view that he's seeking. He's bought it at levels of 414 rupees per share, and he's got 1,000 shares. Asa, on the fundamentals, would you continue to hold? He's seeing quite a decent profit at this juncture.
Because the company has taken certain price hikes, so that might have, positively impacted the margins, and we are seeing some positive momentum in the stock prices. But I think partial profit booking is always recommended in the logistics stocks because, industry tailwind, I always look after that part also, and I don't think that industry tailwind is so strong for these logistic companies. So my idea here is to book partial profit and remain invested in the partial profit.
All right, so book partial profits on VRL Logistics is the view coming in from Asta. We have our next caller, Sanjeev Thakur is calling in from Himachal Pradesh. Sanjeev, thanks for calling in. कैसी ठंड पड़ रही है हिमाचल में?
काफी ठंड है मैम. Good morning.
Good morning. Good morning.
There's a lot of snow on the Dhauladhar mountains.
I agree. कहिए, हम आपकी कैसे मदद कर सकते हैं?
Ma'am, I'm holding 350 shares of Container Corporation at the rate of 540.
Okay.
So the last 3 or 4 months, it's not going anywhere.
Okay.
So shall I continue to hold it or sell it?
All right. When you bought these shares, was it from a longer term perspective? Fundamentals देके खरीदा था या technicals देके खरीदा था?
नहीं, long term fundamental.
Okay. So you would want to continue to hold it from a longer term perspective, I believe.
No, I can, but in the last 4 to 5 months, it's not going anywhere. In fact, it's coming down.
Okay. So then you want a fundamental view on this, or should I go to the technical guest?
Fundamental.
All right. Asta, I'll come to you on Concor. Your view as to how the stock will do?
Yeah.
Asta, I think you're on mute.
Okay. Fundamental view.
Yeah, Asta, I can hear you. Yes, you're audible.
Okay. So what we are seeing is that in the financial performance of the quarter gone by, the stock price, the profitability was on the average part. It was only 6% growth, which we have seen in the bottom line. So I think now we really need to see that company will be able to pick up some growth in their bottom line, because it was a muted growth which we have seen. My idea here is to book partial profit and remain invested in the partial quantity for Concor.
Partial profit booking and partially stay invested is the view coming in on Concor. Moving on to the next query, Kailash Nath from Trivandrum wants to have a view on Tanla platforms. He has 500 shares bought at 930 levels, and he wants to know as to what could be the next target price as well as stop loss for the next 1 year. He's sitting on a significant loss of around 97,000. Kushal, what should he do? Should he keep holding the shares?
No, it's a sell from my end. The stock is, trading below the key moving averages on the weekly time frame. That's 50 and 200 weekly moving averages. So I think selling pressure might sustain. So it's best to book losses at the current market price.
Okay, all right, so that's the view on Tanla platforms is a sell. Naveen is calling us from Vizag, Visakhapatnam, I should say. Naveen, thanks so much for calling us. How can we help you today?
Hi, Alex. Good morning.
Good morning. Please go ahead.
Hi. I have 32 shares of LIC at 789 price point.
Okay.
Just want to understand the long-term perspective point of view, like more than 5 years, in fact, I can say.
More than 5 years, okay. And out of all of the life insurance companies available, why did you buy Life Insurance Corporation of India?
So I bought it at IPO, and it's not only because of insurance. It is like a copy of the Indian Stock Exchange, right? They have large quantity of many of the stocks, right? So I'm playing it in that perspective. It is not only LIC. It is based on the overall indication of the stock market of India.
So the non-core assets that it is holding, you are buying it from the perspective of the portfolio of stocks that it is holding.
Yeah, and both perspective, correct.
Got it. Okay, so as in, you've looked, of course, it has quite a bit of several stocks in the Indian equity markets, and I'm sure you've done your research. Asa, on the fundamentals, this would, of course, factor in the valuation, and some might say that from that perspective, it's not necessarily been given its due. He's bought at attractive levels, 789 or thereabouts, and so the prospects, a lot of people have said purely on the business side are good, but he's also bought from the perspective of the underlying investments that it has. What's the view on the fundamentals?
So fundamental wise, I think one can remain invested at the counter because fundamental seems to be okay. Now they are increasing their share in the non-par segment. So I think that will really help the company. And they are taking certain strategies like the realignment of the product portfolio, focusing towards more non-par business. So I think this company will show further upside from here on the basis of the steps which are taken by the company. We are expecting the stock prices to move till the level of 1,000 or 1,005 odd levels. So my idea here is to stay invested in the counter.
All right, stay invested in the counter is the view coming in on LIC. Moving on to the next query, Satya from Thrissur wants to have a view on NACL, and he wants to know whether are these the right levels to enter from a longer term perspective. Asa, not sure if you have this under your coverage. It's basically a fertilizer company.
Right, so I am not able to comment on this because yes, I am not covering this.
No worries. Kushal, how does NACL Industries look on charts?
Positive from a shorter term point of view. The stock is basing around 50 DMA, which is a positive sign and showing some some resilience to draw down. So I'm positive on the stock. But I would just want to wait for the levels of 250 to be taken out. So yeah, that's a buy about 215 levels.
Okay, it's time for rapid fire, and Kushal and Asta, this means that we'll toss questions at you over the course of the next 2 minutes. Do give us your answers as quickly as possible and as succinctly as possible. The first question should be an easy one to answer. HDFC Bank, 65 units, bought at levels of 476. Is that right? Is that right? I'm not really sure how the buy price can be this low. Somnath Roy has bought. Would you hold, Asta?
Of course, it's a hold from our side with a price target of 1,850 to 1,900 in the longer term.
All right, HUL is the next company. The person wants a view from a 6 to 9 months perspective. He's bought at the levels of 2328 and he's bought 10 shares. Kushal, your view on HUL with respect to charts?
Positive. I would want to hold this stock. My target from a short-term point of view is 2536.
Pradeep from Coimbatore, Z Entertainment is the name of the counter. Pradeep wants to know, he's bought at levels of 90. Should he hold on? Should he sell? On the technicals, what's the view, Kushal?
My view.
Sell? Is it a sell?
Yeah.
Okay.
It's a sell.
Alright. Abdir from Madurai is holding 1,000 shares of SpiceJet and he wants to know whether he should keep holding it or sell. Astha, your view on SpiceJet?
What is the cost price?
68.
I think partially exit from this counter.
Okay, Souvik wants to know what Tata Motors bought at levels of 928. Long-term view, Astha, hold?
Yes, hold from the long-term point of view with a price target of 850.
Okay, Afcons is the next counter. The person got an IP allotment of 32 shares. Should he keep holding it or sell? Asa, do you have a view on this?
Yes. Afcons is looking good to us. Remain invested in the counter with a price target of 600.
Okay. All right. We've got more. We've got Birla Soft that we're looking at. Shrikant wants to know about this. Bottom levels of 450. Would you hold or exit? Kushal?
Alright, Patel Engineering is the next counter. What is the forecast for this stock? Because the person is holding 4,000 shares bought at 53 rupees. So it's trading around that level. Astha, your view?
Patel Engineering is looking good to us. One can remain invested in the counter with a price target of 65.
Okay, all right. So we've got quite a few questions answered. Thank you so much, Kushal and Astha, for joining in, for answering all the questions that you did. Always a pleasure having you on the program. And that brings us to the end of this edition of Ask Profit. It's been absolutely incredible interacting with all of you from around the country. Please continue to call us, message us. We'll be back tomorrow at 10:30. No, not tomorrow. It's a weekend tomorrow. We'll be back on Monday.
At least I'm not working, Alex.
We'll be back on Monday at 10:30 to take more of your questions. So we'll see you then. In the meanwhile, do stay tuned. This is NDTV Profit.
On my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant food above a 600 level on Friday.
Wipro can be first to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open.
Hello and welcome to KYC, a brand new show at NDTV Profit. In this fast-paced world of stock market, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. Know Your Company is a show designed to give you regular investors a powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today, yet again, we have a very, very interesting company. This is from the healthcare space. We're talking about KIMS. Now, in terms of what the particular company does with respect to, how things are panning out there, of course, we're talking about, several aspects to the company, but it operates a chain of multi-specialty hospitals, specifically in Andhra Pradesh and Telangana, as you can see. And, moving on in terms of its specialties, it does focus on tertiary and, following healthcare affordable costs as well. It also offers services across more than 40 specialties and super specialties too, which always turns out to be a little bit of an advantage when it comes to that. And even if you consider the way its revenue mix has panned out, as you can see, it's fairly diversified actually, and it's very, very equally poised too. So about 16% coming in from renal science. We have about another 14% coming from orthopedics, cardiac science, and mother and child, among others, which contribute significantly. But as you can see, there isn't one or two specific areas of focus for this particular company, or that, for that matter, KIMS Hospitals. In general, it is looking at a fairly well-diversified portfolio. Even in terms of a cluster revenue, it's, as we mentioned, it's mostly focused towards Telangana and Andhra Pradesh. Telangana actually the biggest market for the hospital. That's followed by Andhra Pradesh, and it does have a little bit of presence in Maharashtra as well. And this, of course, is based on its revenue from what regions contribute to most in terms of revenues going forward. Moving on, and among the handful of other factors, of course, we've spoken about what the hospital does, but as usual, what we tend to do is take and consider how the hospital has panned out across several parameters in the past. So when it comes to the income statement check, we talk about the balance sheet. We also talk about the cash flows and how that has panned out, along with return ratios too. Besides that, we also consider, well, parameters like shareholding, valuations. Valuation is going to be a very interesting one to keep an eye on, because we actually have a very comprehensive data with respect to not just the company, but also a lot of its peers in the listed space, and street coverage along with street credentials too. And by street credentials, I mean how the stock in fact has done over the past few months. But let's bring this conversation forward and talk about a handful of these aspects right at the top. But let me also get in my colleague Varsha, who's going to join us and help us further elucidate, further give us insight into how the company has in fact done. So Varsha, thanks for joining in. Let's, as usual, start off by the income, how the top line and the bottom line has panned out for the company.
Well, thanks Agam for that. So in FY24, you see the revenue was around 2,500 crore and EBITDA at 623 crore. But if you see the margins are at 24.8% in FY24. But if you consider that H1 numbers, or particularly Q2 FY25, the margins are pretty good at 27%. We need to see, well, the company will maintain that or not. And the net profit is at 336 crore. But if I were to talk about the CAGR growth, that is compounded annual growth for the company in the last 3 years, revenue was, the CAGR growth in revenue is at 24%, followed by EBITDA at 20% and net profit at 50%. So yeah, pretty a good set of numbers, Agam.
Well, there's no doubt about that, because 24% CAGR over the last 3 years and profit CAGR of around 15% certainly bodes well with respect to what investors may in fact expect out of a company of this size. But I'm going to take you through what we've seen in terms of the balance sheet as well. In general, the balance sheet also looks like it's at a decent footing. Its net worth stands at around a little over 2,000 crores. We have a gross debt of around nearly 1,800 crores, but also cash in bank standing at around 77 or 80 odd crores. Now, if you consider the overall debt to equity ratio, that's closer to the mark of 1.8 to be, perhaps it could be closer to that. Considering it is in a growth phase, and I'm assuming that there's a lot that is used in terms of investments which are being put back in focusing in not just R&D, but also expanding in terms of hospitals. Well, we will give this a neutral rating. Because the debt number at the moment is still relatively high, but as I mentioned, that it does need the kind of debt that it has, because it is still expanding and it's in a growth cycle right now. So it's going to be a neutral rating there. But Varsha, cash flows don't look that bad for the company.
On that note, Agam, actually the things that you mentioned, if you see the cash flows from operation, which is actually a pretty important number for the companies, in FY24 it was around 521 crore, and in FY23 it was 432 crore. Now, if you see the net cash flow, in FY24 it was negative 14 crore, while in 23 it was negative 95 crore. Now, one of the reasons because of this is because as Agam rightly mentioned, that they are investing into, they are actually expanding their capacities. They are going into brownfield and greenfield projects, and that's the reason we are seeing the negative cash flow because of the investments that they've done. So on that note, because they are investing into their capacities, we would give a thumbs up rating for that.
Sure, absolutely. And moving on, to tie this all up, we also take a look at how things have panned out when it comes to its return ratios. And the return ratios certainly do look good. If you consider the return on equity, we've actually seen an improvement moving above the mark of 20% from sub 17%. And a 20%, return on equity is a good number to have. Anywhere between over 20 to 25% is certainly a positive. And even in terms of its return on capital employed, well, it has come off to a certain extent, but it's not too far away from our benchmark. So because of that, we're giving this one a thumbs up as well when it comes to KIMS Hospital. Now that we've spoken about the income statement, the balance sheet, the cash flows, as well as return ratios, let's look beyond as to how the company has panned out fundamentally. So, Varsha, let's talk about the shareholding as well, which is quite curious in this case.
Well, Agam, if I were to talk about shareholding, normally, we like the companies wherein the skin in the game by the promoter is more than 40-50%. But over here, if you see, it's like 38% kind of shareholding that the promoter has been holding. But the positive point here is, Agam, if you see the FIIs and DIIs holding, they're pretty good. Though FIIs has fallen by mere 2%, but that's fine. But still, they have almost 16% of FIIs holding, and DIIs are around 32%, which is not bad. And public shareholding has also gone up. So on that note, because of the foreign institutional holdings and domestic holdings, we would give thumbs up to this.
We would, yes, and point taken. The fact that the institutional holding is so large, and the fact that the promoters do still hold about nearly 39% stake, which we're going to give it a thumbs up. But Varsha, perhaps the most interesting of all these parameters will be valuations, this average revenue per bed, with respect to its peers. How does all that pan out?
Yeah, so Agam, let me start out with the important metrics that one needs to consider when it comes to hospital business. Starting with KIMS, if you see the ARPOB, now what is ARPOB? Is average revenue per occupied bed, which is actually important when it comes to hospital. The ARPOB for KIMS is at around 38,000 odd levels, rupees 38,000. While if you compare it with Yatharth, Aster DM or Shalby, so pretty good pretty good ARPOB when it comes to KIMS. Then we have Aster DM, which is at 43,000 odd levels when it comes to ARPOB. But if I were to talk about the bed capacity, KIMS had almost 4,600 beds versus if the Aster has almost 4,994 beds. So good when it comes to ARPOB, good when it comes to bed capacity. But occupancy levels, if you see, so not that good number, but of course we can give a benefit of doubt to the company considering the expansion that company is doing, and this is the reason we are seeing the occupancy levels at 50% versus you see Yatharth has 61% of occupancy and Aster has 69% of occupancy. But overall, considering these three metrics, pretty good sort of numbers. But if I were to talk about the valuation, considering what is the price to earning ratio for all these companies, so KIMS stands at 74x. It's kind of premium valuation that the company has been given to maybe because of the brownfield and greenfield projects that the company is into, and the good metrics when it comes to ARPOB and all. Because of that, maybe the street is giving a premium valuation. But considering Yatharth and Shalby, the valuations are premium, but if you take into consideration the Aster DM, the valuation is below compared to Aster DM. But we need to see that Aster DM has also a lot of growth potential, and the recent acquisition of Quality Care will actually put Aster DM into a good status as well.
Right. So Varsha, I just want to add here that the reason why you see such inflated valuations is for a couple of reasons. Firstly, that you must remember that the outstanding shareholding of the company stands at around 10-11%. So there's actually not a lot of stock which is there on the free float, notwithstanding the kind of institutional holding that the company has. So there is a little bit of scarcity premium. There's no doubt about that. I was actually looking at the shareholding of Aster DM as well, and it is nearly the same. The outstanding minus the promoter holding and the institutional holding, if you look at how things are panned out for Aster DM, mind you, not for KIMS, that is also again at 10-11%, which is why both KIMS as well as Aster DM are trading at as high valuations of around 74 times and 80 times as compared to some of the other hospitals that would include Yatharth and Shalby. The other aspect, of course, is that I'd reckon, and in this case, KIMS has certainly shown a lot of growth. Of course, we need to pitch this up against some of the other companies. But my guess is that KIMS, in terms of your bottom line growth, could potentially be as good or slightly better than what we've seen in terms of Yatharth and Shalby, which is why the investors may want to ascribe a slightly higher price to earnings ratio with respect to KIMS Hospital. But that's the limited point here in terms of the reasoning behind that valuations. But let me also talk about analysts and what they make of the particular company. So firstly, there are about 15 analysts on the street who track the counter, and 14 out of those 15 analysts have a buy on this. However, The return potential based on their own price target is just about 3%, which it doesn't mean too much, which is why we will also go ahead and give it a neutral rating. So while the street remains positive in terms of valuations, or rather how they are seeing the price of this particular stock, it does seem like it's fully valued, or rather it's trading near its fair valuations. Finally, coming down to street credentials, Varsha, how has the stock performed?
Well, pretty good returns that the stock has given to investors. If you see in the last 6 months, it's up almost 47%, not bad. In last 1 year, it is up 60%, and well, in last 5 years, company has given 200% returns. But considering the size of the company and the expansion plans, these are, I mean, pretty good numbers, not that bad, you know. So we would like to give a thumbs up to this.
Well, so there you have it. So, you know, let's put this all together and tie it all together. And in terms of your overall ratings, it does seem like we're looking at a thumbs up for the income statement, a neutral for balance sheet, thumbs up for cash flows and return ratios as well. In terms of other factors, we're looking at a thumbs up for shareholding and street credentials, a neutral rating for valuation street coverage. The positive here is that it has no thumbs downs, and the total score that we get based on several of these parameters is 6 out of 8, which is certainly not bad. So first class with distinction for KIMS Hospital. You know, before we get the management in, let's very quickly talk about the SWOT analysis here as well. And I'm going to talk about the company's strengths. Well, firstly, it has a very well-established presence in the 2 states that we spoke about. And besides that, it has a sound operating efficiency. Just want to address that the company does have strength in addressing chronic diseases, which has unfortunately been on the rise, but the company does come through on that particular aspect. So that can be considered as a strength. In terms of weakness, again, you know, the same strength that they have could potentially be as a weakness in terms of diversification, because their revenues are essentially geographical concentration risk. It's not a substantial weakness to say the least, because they do have very strong presence in, well, at least 2, if not 3 states, and they are expanding from the looks of it. And of course, you know, exposure to regulatory risks, that is always going to be an issue for the entire sectors, just not just pertaining to KIMS Hospital. Varsha, what about other opportunities and threats in this case?
Well, if I were to talk about the opportunities, Agam, health insurance, so the penetration of health insurance in India is one of the opportunities that the company has. More number of health insurance penetration, the more it benefits a hospital segment as a chain. Next is the government support that that overall the sector has been, having this. The government support is the other opportunities. While if I were to talk about the threat, intense competition is, you know, one of the threats that the company is facing. Recently, this PB FinTech has also announced that they will be, you know, entering into hospitals, not directly, but they will be investing into a company who will be going into this hospital segment. And we have seen in the peer comparison, a lot of hospital chains are actually giving tough competition when it comes to KIMS. So intense competition is the threat that this company has, or even any hospital would have.
All right. Varsha, finally, before we get the management in, who is in fact waiting by to speak to us, can you tell us about the outlook of the company so far?
Well, Agam, yes. So the whole conversation that we were speaking about, the expansion plan that the KIMS has. So they're going to add 3,000 beds in Kerala over the next 5 to 6 years, and the capex is with respect to, you know, asset-light models and also greenfield projects in major cities. And they've also planned new facilities, including 350-bed hospital in Thrissur, which is dedicated to advanced transplant services and oncology. You know, the contribution from oncology is mere 6%. Maybe they want to increase there as well. And they're gonna also they aim to strengthen its presence in tier 2 and tier 3 towns, focusing on high-quality healthcare services.
Okay, so very interesting. And let's get the management in on that note. We have Mr. B. Bhaskar Rao, the CMD at KIMS Hospital, who joins us on the show. Mr. Rao, good morning, and thanks for taking the time out. Firstly, let me ask you about your capital expenditure. From what we understand, is that you entail about 1,600 crores in terms of capex. And this includes expansion in Thane in Maharashtra. It also includes, 2 units coming in as far as Bangalore is concerned. And you're looking to commission a 4th, commission in the 4th quarter for these 2 units. How much of this capital expenditure has been incurred, And if we look beyond FY25, what are we expected when it comes to expansion for KIMS hospitals?
Good morning. As far as expansion capex is concerned, both Thane and as well as Bangalore, which are going to come in the first quarter of next financial year, and almost all the another 300 to 400 crores capex we need to infuse. The rest are already done out of the 1600 crores. So with that, the debt may go up to maximum about 1800 to 1900 is the total debt by financial year, end of this financial year.
All right. All right. Also, so one is your debt. So this will lead to your debt equity ratio to how much? Number one. And number two, beyond 2025, what is the additional beds that are expected, to be added in say next 2 to 3 years? Because the current bed capacity is almost 4,600 beds. So do you have any target, say 8,000 or 10,000 beds that you want to take in next 2 to 3 years?
Yeah, basically today we have all the capexes done. In the next 2 to 3 years, we have lined up about, if you look into that, by 2030, we should have about 10,000 beds. And all these 10,000 beds is coming, nearly 2,000 to 3,000 beds comes in Kerala, and maybe 1,000 beds comes in Maharashtra, and 1,000 beds in Karnataka. Another 2,000 beds, 1,000 from Telangana and 1,000 from Andhra. Andhra and Telangana, most of the places except 1 or 2, all the existing hospitals were expanding women and child. In Telangana, we may get another 1 or 2 hospitals. In Andhra also, we may get 2-3 hospitals and new brownfield projects. So we are aiming for it. We are looking for the opportunities. So with this, I think by 2030, maximum, we will get in 5 to 6 years' time, about 10,000 beds is the total things.
Mr. Rao, given the kind of expansion that you have in mind over the next year or two, do you think that we could see a little bit of moderation in your operating margins, which are actually very healthy at around 28%? But considering you are looking to raise a bit more debt, I'm sure there'll be a lot more expenses going in to this expansion. Do you think that the operating margins could come off to a certain extent? Is that something that the shareholders should be ready for?
Usually what is happening now, wherever we start, we are expecting once all the consultants boarded on the organization, usually it will take 1 quarter once we get the OC from the government to start. After that, maximum it will take 2 to 3 quarters to reach the EBITDA zero. In this portion of 3 to 4 quarters, there may be some dip of margins because of this consolidation or expansions which are going, more and more beds are adding. After 4 quarters, I think we'll be able to showcase whatever is the margins that we have been running today. It will continue to generate that much of margins. That's what our expectations.
And Mr. Rao, can you give us an idea about what revenues could potentially look like for FY26?
FY26, what we are doing, maybe there will be a 50% jump if all the hospitals what we are operating will be able to do good job.
All right. Also, sir, if you see from the last 4 quarters, you had on a consolidated basis, the ARPOB, that is average revenue per occupied bed, was in the range of 30 to 31,000. Now it is in range of 38 to 40,000. So what are the reasons behind the growth in ARPOB that we have seen? And considering the expansion plan, is there still upside margin left for the ARPOB?
See what happened in the last couple of years. We are aiming for the complex procedures and the transplants in a big way. Today, if you look into that, the heart and lung transplants, we have done 100 this year. That is a high-end ARPOB per patient. Similarly, all the transplant programs, robotic procedures, and the non-invasive procedures we keep adding. high-end tertiary and morely quaternary care and complex procedures when the organization is keep growing and more experienced consultants has come, they are tackled to do more and more complex procedures. So with that, the revenue ARPOPs will increase. Apart from that, we also added oncology in 1 or 2 areas and mother and child in 3-4 areas. Moving forward, these 2 things will come. That also pushes the ARPOPs little higher than what is existing today.
Mr. Rao,
and apart from that also, there is moving forward in the next the coming year, we are adding 1,000 beds both in metros like Bangalore and Thane. Those are all usually the market itself is a high ARPOPs. So with that also it will pushes the existing ARPOPs to different.
Mr. Rao, taking the occupancy metric as a whole on an absolute basis, I know that you suggested that you are still looking at addition and further beds overall over the next few quarters. Do you think that the occupancy could remain around the 50% mark, or could that increase since you have a lot more beds coming into play which will start getting under operation? How does the picture look like over the next few months?
No, it will definitely increase. When we have about 4,000 beds, the occupancy was around 65%. The operational beds, if you take, it will be 75-80%. Whenever it crosses more than 80%, we'll keep adding more beds into the operational sector. Recently, I think a year back, we've been moved on to the new facility in Sunshine, where the more beds has come in Gachibowli. They are also ramping up. That's why this 50% occupancy has come, and it was 4,000 to become 4,600. That's why the 50% has come. It will definitely grow and will reach to 65 to 70% for a period of time.
Right. So last 2 questions from my side. Just wanted to have a view on the geographical expansion. You are concentrated more when it comes to South India. Any plans for expanding into other regions? Number 1, and so. Also, I wanted to talk about so 8% comes from Maharashtra, where you want to take this and the inorganic opportunities that you are eyeing.
See, basically the geographical, now we are right now on the 5 states like Andhra, Telangana, Maharashtra, Karnataka and Kerala. These are the 5 states, and recently we started expanding in these 3 states. So first we need to consolidate. It will take another 2-3 years before we look anything in any other state. Our entire focus in the day one is, it is always better to focus in one area so that we will reach to the nook and corner of every patient of our brand. Not only that, the quality care and affordable care what we are giving, rather than putting into different states. The entire mindset of the patients, the public, the political scenario, the doctors will be entirely different. It will be more operational efficiency rather than putting in different states. As you mentioned that we are concentration, but these 5 states is also itself is a bigger geographical coverage. And we went into tier 1 and tier 2 and tier 3 cities. That is where we can able to provide a good quality care to each and every patient which is required health care. What is the second question?
Inorganic opportunity.
Yeah. The opportunity in Maharashtra is still there. We have been only in Nagpur. Nashik is going to fully functional by next quarter. That is first quarter of next financial year. There is a great scope we are seeing. Apart from Thane, we are looking another 1 or 2 places in tier 2 cities. We are looking into the opportunity, and also there we are looking at another 1 or 2 hospitals in Bombay. Right. Once this comes, the things will able to improve in the Maharashtra. The pie is concerned.
Okay. All right, Mr. Rao, we'll leave it at that. Thank you so much for joining us and giving us that insight into what we can expect from KIMS hospitals going forward. But I must mention that at the moment, with all the fundamentals that we have considered, the company is on a very strong footing and it's looking to consolidate further in the markets that it is already present in and then gradually consider expansion moving forward. But thank you once again for joining us. Well, on that note, it is a wrap on this edition of Know Your Company, but lots more lined up on the other side. Stay tuned to NDTV Profit.
This is on my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors. Those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant food above a 600 level on Friday.
Wipro can be first to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is on my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared.
Welcome to Hot Money. I am Hiral Dadia and with me is Mika Barve. Clearly, if you see Mika in terms of markets, there is some bit of pressure that again is building up in today's session. It has been a volatile day, but if you see Nifty 50, we're at 24,135. Some bit of recovery that's coming in from the day's lowest levels as we speak, but we are seeing cuts of 0.2% coming in there. The advanced decline ratio also is pretty much 50-50, at least in terms of Nifty 50. But let's see what it looks like in terms of overall markets. There you go. You have advances which are higher as compared to the declines. Let's just pull up the sectoral heat map and see which are the sectors that are gaining and which are the sectors that are losing out today. So media is one of the top gainers, followed by oil and gas. PSU Bank Index and metals are doing pretty well in trade. You have IT, which is the sector which has been seeing pressure. In fact, next week, you'll see IT earnings that will start trickling in with TCS. Pharma has been trading under pressure, so clear profit booking coming in terms of the pharma names as well. Bank Nifty is down almost 0.5%. So it's mainly the private banks which are taking a beating, whereas the PSU banks, on the back of the updates that are coming in, are seeing some good moves in today's session. Real estate continues the downward trend for a second or third consecutive session. Auto is an interesting name to watch out for as well, because the auto index was seeing gains for 5 to 6 consecutive sessions on the back of the December numbers that did come out. So that's a sector that we have been watching out for as well. Let's just pull up individual stocks which are seeing action in today's day. Tata Motors, 4.5% up move in today's session, and that is on the back of the addition to the CLSA portfolio. ONGC is seeing some smart moves in today's session. Indusind Bank, Titan and NTPC also up in trade. Wipro, Tech Mahindra under pressure. HDFC Bank on the exit from the CLSA portfolio is down on trade. Hero Moto on the back of numbers is under pressure, and a Dr. Reddy's which is down and about. So that's with regards to benchmarks and large caps, Mika. So clearly, no specific direction that we're trying to pick up in terms of markets right now, but a lot of stock-specific and sector-specific action.
That's right. But, when you talk about the broader markets, they're clearly outperforming. You have the Nifty mid-cap up about 0.2% and the Nifty small-cap, which has gained almost 0.5% in trade right now. I want to pull up the Nifty small-cap 250. We have 162 advances against 81 declines on this broader market index. And something that's the top gainer is ITI. It's up 11% today. And this is a stock that has gained 28% in the last 5 days and almost 50% in the last month. So we need to figure out what's going on there. But something else, other counters that are showing strength in today's day of trade in terms of small caps, we have a Saregama up about 7%, followed by a Sham Metallics and a Just Dial seeing gains of 4 to 5%. We also have a Sapphire Foods which is up and about in trade. Something that's not doing so well, we have something like an Angel One under pressure seeing cuts of about 3%. Tanla Platforms down about 2%, as well as the PNC Infra showing some weakness, down about 2%. I just want to pull up the Nifty mid-cap 150 up about 0.22% right now. We have 99 advances against 69 declines on this broader index. Something that's doing well is a Lloyd's Metals. It's up 6%, as well as the Bank of Maharashtra up 4%. We have Oil India also gaining traction, up about 5%. It was up in trade yesterday, and its peer ONGC is also up on the back of a brokerage note. Some strength in some gas and metal counters like an IGL and a Hindustan Zinc. We actually do have a Q3 update for Hindustan Zinc, but we'll get to that in some time. But with regards to the key themes for today, Hiral, what are we going to be discussing?
It's interesting themes that we are watching out for in today's session. Firstly, how is the third quarter expected to be for Zinc, MOIL, Capital, SFB basis, the quarterly updates that they have come up with? So that's what we're going to talk about. On number 2, you're talking about sales and acquisitions. You have Industar Capital, Varun Beverages, Bharti Airtel that are in focus. And on number 3, there's a regulatory boost coming in for a Walcard and Biocon. In spite of this, you have the Pharma Pack, which is trading under pressure. And the Auto Pack is up and about in trade, but you have a Hero Moto, which is on a slow footing with a Force Motors. ITC Hotels demerger, all you need to know, because today is the last day that you will be able to make benefits out of this. And on the brokerage of the day, you have Axis Securities, which has initiated a buy on Sagility. That stock is up in trade. And you have Maharashtra, which is leading in terms of attracting FDI. They've managed to get almost full year's FDI in the first 6 months. More details on the same. But let's first talk about the first theme that we're looking at, all the business updates that have come in across sectors. 3 sectors that you're tracking is from banks to metals and mining and consumers. All the 3 smart names that are coming in fact, our research team is standing by to get you a detailed analysis. We have Mahima, Mika and Agam who will be joining in. But let's start off with Mika. Mika, what's the picture looking like for the metal sector, taking into consideration 2 of the companies that have come in?
Yeah, so we actually have Hindustan Zinc and MOIL, which is in focus on the back of its Q3 updates. Let me first start off with Hindustan Zinc. Now it's come up with its Q3 production